everyone, and thank you so much for tuning in. I'm Ashleigh Barry, and I'm thrilled to welcome you to this exclusive investor webinar featuring Sonoro Gold Corp, a dynamic exploration and development company advancing high-potential gold projects in Mexico. They're listed on the TSXV as SGO, the OTCQB as SMOFF, and on the Frankfurt Exchange as 23SP. Joining us today are two leaders driving the company's vision, Chairman of Sonoro Gold, John Darch, and Kenneth MacLeod, President and CEO. So today's conversation will focus on Sonoro's flagship Cerro Caliche Gold Project, market timing, resource expansion potential, and key milestones ahead. We'll also discuss the broader portfolio and leadership strategy for building long-term value for shareholders. Now, I just want to give you a quick note. We will leave time throughout for questions, so feel free to submit them using the Q&A box. I'll weave in as many as possible during this conversation. Also, this webinar is being recorded and will be available afterward for those who wish to revisit or share it, and I'll share more details at the end of this webinar. So without further ado, I'd like to get started and welcome John and Ken to this webinar. Welcome, gentlemen.
Thank you, Ashley. It's a pleasure to be here. Good to see you again.
Thanks, Ashley. Always wonderful to chat with you.
Yes, always a pleasure. So, Ken, I'd like to begin with you and the big picture for Sonoro Gold. Your flagship asset is Cerro Caliche, now fully owned after a series of strategic acquisitions. So what would you say first drew you to this project, and how has your conviction evolved to pursue 100% ownership?
We had looked at several projects in northern Mexico before we purchased Cerro Caliche. And we figured that Cerro Caliche had the greatest promise and could be put into production as soon as we had developed enough of a resource to be able to put in production, generate cash flow, and then use the cash flow to expand the resource. So we went off to a great head start. And we, over the past 4 years, now it's 5 years, we drilled that there's a grand total of over 498 drill holes in 55,000 meters. And the bottom line there is we've now got a resource that is capable of supporting at least 12,000 tons per day of throughput, which yields approximately 33,000 ounces of gold per year. Now, that is a great head start for any mining project, because with cash flow, you can then continue with the drilling program and realize upon the future potential for the project. Now, during that period of time, since 2018, we've raised over in Canadian dollars, $24 million. And the mineral resource estimate was filed in March of 2023. And then in October 2023, we filed a preliminary economic assessment. And now this assessment is the driving force behind the value of the project. And the mineral resource assessment was the basis in which the PEA, or the preliminary economic assessment, was prepared. Now, it was done on the basis of $1,800 gold. And it was extremely attractive from an economic perspective. And we'll go into the details on that. But now with gold at over $3,300, the numbers are actually substantially better than, and we can't disclose them quite yet. But it's simply because we haven't published an updated PEA yet, which we're in the process of doing at this point in time. So that's step one. Now, the next step is, how much of a potential is there to expand the resource? And we've only drilled an asset less than 30% of the known mineralized resources on the property. So there is significant expansion potential. We'll talk about that as we go through.
Terrific. So, I'd like to dive deeper into the preliminary economic assessment. You're saying that there's one actually underway right now that you're working on. Can you walk us maybe through the highlights, the net profit value, IRR, projected mine life, and what those specific numbers mean in today's market for investors and for your company?
So here's the economic potential of the project as it stood in August of 2023. At an $1,800 gold price, it had a net present value pre-tax of $71 million US and a 59% pre-tax IRR. Now, that's robust by any stretch of the imagination, payback in less than 2.9 years. And that's on the basis of producing a net average of 33,000 ounces per year over the initial 9.5 year life of mine. Mm-hmm. Now, keep in mind that this life of mine is temporary, in that we will continue with the drilling program, and it is expected that the life of the mine will be increased substantially as we continue with the drilling. But so far as the price of gold at $2,000 is concerned, if you can see, there's a substantial increase in both the net present value and the IRR, with payback at $2,000 in 2.4 years. Now, if you were to interpolate all the way up to $3,300, where the price of gold is today, it would be quite astonishing how the numbers would stack up. And we're looking forward to issuing sometime in the next, I would say, 2 months, the next edition of the PEA, and it'll be probably done on the basis of $2,500 gold with sensitivities of 20 plus or minus 20%. But it'll give you a really good understanding of what the value of the project is as of today's date.
Right. I would have to imagine that there's a little bit of buffer there, obviously, that you have to leave. But I think that really helps lay the foundation nicely for folks to understand. So this study outlines the recovery of nearly 300,000 ounces of gold equivalent. So can you speak to the current resource estimate and whether there's exploration upside that hasn't yet been priced into the market?
Yes, when you look at the map of the project, we have approximately 28 parallel mineralized zones. These are vein structures that are trending towards the northwest, and they're quite well defined as far as surface work has been concerned, but only 8 of these zones have been drilled and assayed to date. So that leaves us with almost 20 mineralized zones that have to be drilled into the future. And this is where we get the feeling that less than 30% of the known mineralized zones in the property have been drilled and assayed. Now, when you look at the potential for the project, we've always maintained that it has a potential for up to 2 million ounces. And that has not changed. In fact, it's been supported by, to a great extent, by the drilling we've done to date. And SRK produced the resource estimate back in 2023. And SRK's analysis showed that while there is 440,000 ounces already defined within the pit shell, the potential surrounding the pit shell, which could be expanded by infill drilling with very low risk in that regard, could expand the resource by up to another 208, I believe it's 285,000 ounces of gold equivalent, of which, when we're talking about gold equivalent, I think it's important to recognize that this really is a gold project. 95% of the revenue will come from gold, and the balance of 5% will come from silver. So it's incumbent upon us now to get into production as soon as possible, generate the cash flow, use that cash flow to continue with the drilling program. So there's less or very little dilution, of any, to the shareholders of the company. Now, we have a slide here which shows the value in the capex as the price of gold goes up. Now, once again, I can't go beyond $2,000, but at $28 silver, $2,000 gold, obviously, it's just a starting point for where the value of gold is today. So continue with the upward trend. And the IRR at $1,800 gold, as you can see, is 59%. And at $2,000 gold, it goes up to 85%. So continue with that trend. And at $3,300 gold, the numbers become substantially higher. So moving forward, here's the estimated capital cost, because this is one of the lowest cost mining projects you'll find anywhere in the world. So the way we planned for the mine is an open pit heap leach mine. Now, I've heard people say it's a glorified gravel pit with benefits, and that's fine. But the essence of it is the amount of gold that we can process in this open pit mine and the leach pad is quite astonishing. So when you look at the overall capital costs up front, we've been able to cut it down to $15.5 million US. And that is based upon leasing the crusher, using contract mining, which enables us then to devote our focus strictly on the processing side. And then as we go into production and we start generating revenue and cash flow, We will then use that cash flow to expand the leach pad, expand the crusher, and install the power line out of cash flow in year two. And additional equipment would be purchased at that point. So that's another $15.5 million that will be paid for out of cash flow. So we're in a very, very strong position there. We have support of suppliers in Mexico that are perfectly happy to lease the crusher to us. It's a 3-stage crush. We crush the ore down to 80% half-inch minus, and it's a common production method that's used all over Mexico. And our team has been very successful in designing and building and operating quite a few of these open pit mines throughout Mexico, especially northern Mexico and Sonora State, where we're operating. And one thing I want to emphasize, back to the north is Arizona, the border with Arizona. You cross the border in Nogales, and from Tucson, Arizona, is a 3-hour drive to the property. And the capital of Sonora State is Hermosillo. It's a 3-hour drive to the south. Now, we are surrounded by mines, producing mines, and soon to be producing mines. And the notable ones being the Mercedes mine to our east on the same structure. And it's an underground mine, and we're getting similar grades in some parts of our concession to what is experienced at the Mercedes mine at 300 meters below surface. And so, we're quite excited about the discovery of these higher grade zones within the property. Next door to us is an open pit heap leach mine, Cerro Prieto mine, and to the north is a large zone called the Santa Gertrudis that has been operated by Agnico Eagle, which is now probably the largest gold mining company in the world now. And they have a large concession there that they've been drilling for the past 5 or 6 years as well, and they haven't made a production decision yet. And two of the things I want to emphasize with Sonora State, it is the number one gold mining state in all of Mexico. It's has a government that is very supportive of the mining industry, and we're very fortunate to have Governor Durazo supporting our project as well. And so, when you look at the GDP of Sonora State, 25% of the GDP is reliant on the mining industry, not just gold, but the mining industry in general. So you can see the importance of the mining industry to the future well-being of Sonora State. And transporting that into the overall global picture in Mexico, 8% of the GDP in Mexico is reliant on mining. So it's important for Mexico as well. So going forward, I believe that you have any further questions there, Ashleigh, on this particular topic?
Well, I appreciate you bringing up sort of the state of Mexico, the map, Sonora State, the support from the governor. I'd also like to talk about the support from the president. I mean, because we have had conversations about this before, back just before 2025, and the importance of that for your operations. You really have had a lot of support rallying around your projects now recently.
Yeah, so we came through a prolonged period of stagnation in Mexico in the mining industry. The prior government under López Obrador was not supportive of mining, and especially foreigners coming in and mining in Mexico. So we suffered as a result of that. We fully expected to get our environmental permit approved in November of 2022. Well, guess what? It didn't happen. We went through the process and there were no further comments, but everything was halted at that point politically. So we've been waiting for the environmental permit since then. So as of October the 1st of last year, 2024, President Sheinbaum was inaugurated. And everything changed dramatically on their first day. The first thing she did was she removed any reference or any desire to ban future open pit mining. In fact, since then, she's been actively promoting mining throughout the countries that are heavily invested in Mexico. And we've been told that our investments are safe in Mexico and that we're welcome to come in and invest more in the mining sector in Mexico. Now, since February the 1st of this year, we've had over 50 projects that have been approved for expansion in Mexico. Now, these are existing mines that have been applying for the past 3 to 4 years for permits to expand their resource, expand their production. And now it's been granted under the Sheinbaum administration. So we're very fortunate to have a president that is forward-looking and is supportive of the mining industry and will continue to be supportive of the mining industry. So I'm looking now at new projects such as ours. There's quite a few projects in the pipeline for approval, and we're one of them. And we fully expect that in time, the Mexican government will now devote its time and attention to exploring and approving new open pit mines. And it hasn't happened yet. It will take time because it is a political shift, as you can well imagine. But we fully believe that if you're going to be issuing permits for existing mines that are building new open pits within their concessions, then it's only a matter of time before they apply that same principle to new open pit mines. And we're one of the first mining companies to be sitting there in the pipeline to be approved. So we're quite fortunate that we have the support of the government of Sonora State as we're going through this process. And we look forward to getting a clear picture from the Mexican government over the next few months.
Yeah, certainly the future looks bright, I would say. Want to talk a little bit about the economics and the impact of $3,000 gold plus. So obviously, as you said, we've seen a significant rally in gold price recently, trading over 3,000 per ounce, some as far as 3,500. So how does this shift, would you say, impact Cerro Caliche's economics and your overall strategy as a near-term gold developer?
Oh, that's a absolutely great question. So back in 2022, we were poised, ready to go into production. We had the initial PEA had been produced. We had an investor out of Europe that was willing and able to provide funding to build the mine. But that withered away on the vine when we didn't get the environmental impact statement approval, or the MIA as it's called in Mexico. And so that was left behind. But now with gold at $3,000, over $3,000, the funnel has opened up wide for mining finance, for gold mining finance. And we have been inundated with proposals for all kinds of minings, whether it's forward selling of gold, whether it's majority debt and a little bit of equity. We're certainly not going to go for anything that is going to constrain the company from fully enjoying the fruits of all the risks that we took over the years. So we are actively engaged in conversations with companies in that regard. We believe that at $3,300 gold, it's going to be a very compelling and easy financing proposition for us. So that's one thing. And once again, I want to emphasize that this is the initial production of averaging 33,000 ounces a year net is only stage one. Think of it as phase one of a multi-phase program where we continue to apply cash flow to additional drilling and increase the resource. And then you're going to be looking at either increasing the daily throughput, so you're producing more gold on a daily basis, or expanding the life of mine. Currently, it's just like I mentioned, it's just under 10 years. It could go to 20 or 30 years. That's a possibility. Or you do both. You increase the throughput and you increase the life of the mine, depending on how successful you are with the drilling program. So the future for Sonoro and Sonoro's investors and shareholders is very, very bright in that regard.
Yeah, and I'd like to actually dovetail into a couple of questions here about sort of resource expansion, et cetera. I'm going to pause and bring in a question coming through the chat. So we have somebody, Scott Umberg, has asked, how many employees will be needed for this operation once up and running?
Once up and running, it'll be approximately 200 people in total. And I think in the initial phase, it'll be less in the first few years as we continue to expand the resource. But in time, once we get to what I would call the optimum level of maybe 20 or 30,000 tons per day, then you're probably going to be looking at around 200 people. You're looking at three shifts of 8 hours apiece, and you're operating 24 hours a day. So it will be a major employer in the region, and an area right now that is currently somewhat depressed because there have been several gold mines that have shut down in the region in the past 10 years, but they haven't been replaced simply because of governmental policies at the federal level. Now that's all changing. So having the Cerro Caliche mine coming in and opening up will convert the little village of Cucurpe into a major mining center once again. It was in years gone by, but now it will be rejuvenated. And the town of Magdalena, which is about a 45-kilometer drive from us, will also be rejuvenated. There's a wealth of talent in Magdalena from previous mining enterprise and current mining enterprises. So we're in an area that is also disturbed. Back over the past 200 years, there's been a fair degree of mining taking place, not just in the region, but also in the Cerro Caliche concession area, where numerous small-scale mines were operating back in the late 1800s, early 1900s. In fact, into the late 1980s, there was some mining activity taking place. So, from that perspective, it makes for a relatively benign environmental impact, simply because first of all, there's no habitation within 15 kilometers of the potential mine. And so we're not interfering with people's daily lives. We also have an area that is, from an environmental perspective, and there's no protected areas near us. There's no protected species within the mine area. And also, because the ore is environmentally benign, there's no potential for acid drainage. It's all oxide, and therefore we tick all the boxes as far as an environmentally sound mining project. And it's from a social impact viewpoint, we are welcome in this area because we create high-paying jobs. And from the point of view of the future on a political basis, we believe that Mexico is now heading back in the right direction to embrace mining on a large-scale basis.
Fantastic. Thank you for that. And that community commitment is just so paramount, I think. And to have that support and to be giving that support, 200 jobs is no small amount of work for people there, of course. So let's talk about maybe the capital required to advance the project and how those funds would be allocated specifically.
Well, once again, an open pit heap leach mine is not an engineering marvel. We're talking about utilizing some funds to provide the initial strip. So you've got the ore is sitting in the ground, and anything from near surface to 20, 30 meters down, and you start mining. So you have an initial strip, so you can expose where the ore body is within the mining area. Then we will be building a couple of conveyor belts, which will take the ore to the crusher, from the crusher to the leach pad area, and then you build a leach pad, which is about the size of a football field, really, and you load the ore onto after the crushing, it goes onto the leach pad, and then you sprinkle it with sodium cyanide, and then you have a collection system underneath, which then goes to what's called an ADR plant, and then you produce a doré. And at the end of the day, the doré is then shipped off for refining elsewhere, probably within Mexico. And so the biggest single cost item would be the crusher and its associated foundation. But once again, there's nothing difficult about building the foundation for the crusher. So I would say that going forward, the costs will be incremental as we go forward with expanding the resource. But once again, it'll come out of cash flow. And the second injection of capital will be in the order of $15 million, according to the PEA. And once again, that can easily be accommodated by the amount of cash flow that was projected at $1,800 gold, and now will be substantially easier to manage when gold is at $3,300. So I think once again, as I mentioned before, the future for the Cerro Caliche project looks very secure to me.
Certainly. And, speaking of future, let's talk about permitting and the path to development. It's often a gating item for junior developers. So where do things currently stand with permitting at Cerro Caliche, and what's your outlook for next steps, Ken?
I think that from a permitting perspective, we've done everything we can or need to do in order to satisfy the SEMARNAT, the environmental agency. Now it's just a matter of time. I believe that we will see a flood of new permits being granted over the next maybe 6 months or a year as they go through as SEMARNAT goes through the process of reviewing each one and evaluating each project. I can't tell you exactly when we will receive our permit, but I believe that we will be one of the first of new mining projects to be getting the permit. But once again, timing is unknown. It's up to the national government to make that determination.
And let's talk a little bit about risk. Key risks to Cerro Caliche. Is it, technical, jurisdictional, financial? How have you worked to de-risk the path forward?
Well, I like how you listed out. The technical one is, of course, the that's the underlying foundation. Mm-hmm. So technically, we have totally de-risked the project. We know that at $1,800 gold, it is capable of supporting a mining operation producing 33,000 ounces net of gold per year. Now, taking that to the next level and then capitalizing on that, and using the cash flow to expand the resource is also de-risking the project further, because we know the potential is. We have examined the entire concession. We know that there are all these multiple surface manifestations of gold in the various vein structures should and will provide us with additional resource. And our job as management of the company is to make sure that we fully capitalize on that, and we shall. On the resource side itself, we have areas within the concession that are substantially higher grade, and this higher grade it almost indicative of the kind of grades that our neighbors down at the Mercedes mine, 8 kilometers distant on the same structure, but they're getting it at underground depths of 350 meters. And now we're starting to get these high-grade zones, or they call them high-grade clavos in Mexico, which are showing grades of 29 meters of 5.5 grams, and we're showing 46-gram intercepts. And this is the kind of I wouldn't call it a bonanza, but it's a kind of high-grade structure that we've been looking for the past few years now, where we will be able to continue to expand upon these high-grade zones as we continue with the drilling program. So that gives me cause to believe that there is a potential in the future to drill deeper and find higher grade zones at depth, and maybe eventually end up with an underground mine as well. And now that would be the best of both worlds. Mm-hmm. If we are able to have a very successful open pit mining operation and the potential for underground, it gives us a double lease on life as far as the mine is concerned. Location wise, it's in a brilliant location. Listen, Sonora State, as I mentioned, is the number one state in all of Mexico for gold mining. And with the support of the government in Sonora State under Governor Durazo, we believe that Sonora State will be able to capitalize upon its great potential, which has been sort of held back by the national government for the past 6 years, but is now starting to be rejuvenated. And we believe, from a political perspective, that the breath of fresh air that President Sheinbaum has brought to the mining industry is going to continue to be accelerating, because the government of Mexico is looking at a very, shall I call it, bleak future for the GDP of Mexico over the coming year. with the World Bank talking about a 0.2% increase in GDP. And in fact, the Mexican banks are showing 0.1%. Now, that's close to being stagnation or even a recession. So who has the ability right now to be able to stimulate the Mexican economy quickly? It's the mining sector, with billions of dollars sitting on the sideline waiting to be injected once these new mines are being permitted. We're one of them. We'll be there. We'll proud to be sitting in a situation where we can be part of the rejuvenation of the mining industry in Mexico.
Well, I appreciate that, Ken. We also have a few more questions coming in, so I'd like to take a moment to bring one or two of those into the discussion. First question is, what will be the expected revenue in the first production year?
In the first production year, of course, you're ramping up, so you're not going to have a full year of production. But I think over the term of the 9 or 10 year life of mine, as it currently stands, you're looking at 33,000 ounces a year of net production. Now, the cash costs are in the order of $1,300 per ounce, and all-in sustaining capital $1,400. That's US dollars per ounce. So if you take a all-in sustaining capital at $1,400 and take your price of gold, even at $1,800, you're looking at about a $10 million plus or minus net after taxes. Now, keep in mind as well that since we're plowing the revenues back into more drilling, you're pushing the situation for taxes into many, many years down the line. So I believe that the bottom line at $3,300 gold is something I would love to be able to expand to you just now, but I think the listener has to extrapolate for themselves. If you're making $10 million net at $1,800 gold, how much can you make at $3,300 gold? There's a huge difference in the two there. We will announce that once the next PEA has been completed.
Sure. Thank you for that. Another question, they would like to know a little bit about the timing after the government approval.
After the government approval, we estimate that we will be producing the first doré bar within 13 months. Now, how am I so certain of that? Well, our team has built numerous gold mines, open pit and underground mines in Mexico over the past 45 years. Our mining engineer, Jorge Diaz, who's leading the design of the new mine for us, he's operating a private gold mine that he's been mining from now with the past 6 years, and very successfully so. And it's an open pit heap leach mine. It's smaller than what we're contemplating at Cerro Caliche, but nevertheless, the plan of action is identical. Now, he was also a member of the design team for the La Colorada mine back in, I believe it was 2011, which built the La Colorada open pit mine in record time. From the time they received the MIA approval until they poured the first doré bar was just around 5 months. And that, like I said, it's a record time. We are not going to contemplate building this in 5 months, because that's, in my opinion, is pushing it a little. But we have, at this point in time, we're saying 13 months to give us enough time to do it at a relaxed, maybe relaxed is the wrong way, at a more sedate pace without rushing it. And the best thing I can suggest to you is that I'm of the opinion we can do it in substantially less than 13 months, but officially that's where I'm sticking, and that would give us enough time to do it properly.
Excellent. And just another question coming in here about the grades. If maybe you could talk a little bit about the grades and the profitability of them.
Yes, the grades as they stand right now, 0.45 is the average for gold. And of course the internal rate of return on that basis is 59%. So you can't argue with the fact that even if gold went down to $1,600, you're still able to make money. And so we have a great cushion and between us and the lowest price of gold that you could contemplate. Nobody is suggesting gold is going to go back to $1,600. I think that the range in the next decade is going to be a minimum of $3,000 up to who knows where, with forecasts of up to $5,000, and even more than that. Yeah. So, assuming that our grades continue in the same range of 0.45 grams, our future is assured. However, if we continue to expand upon these areas where the grade is plus or minus 1 gram, then the economics of the project really take a turn for the better, even better than we contemplating just now. So we will continue to expose these high-grade zones and expand upon them. And it can only mean one thing for the company and for the project, and that is it will get better and better.
And, Ken, for those new to the company, Cerro Caliche is not your only project in your portfolio. So can you tell us more about your other asset and how it complements the broader Sonoro story?
Oh, absolutely, Ashleigh. The Cerro Caliche project came about in 2018, but prior to that time, we had secured another project and owned it 100% called San Marcial. And the reason we did not drill San Marcial back in 2018 till now was that we had to focus on Cerro Caliche because we had fairly substantial property payments to make and aggregating $5 million. And so we had to focus on raising the capital to pay for the property, which is now done, except for one more property payment. And we also, of course, by paying for the property, we also saw the need for starting the drilling program because we could see it was obvious to us that the potential for Cerro Caliche was extremely high. And when we sat down there or stood on the property in 2017, we could tell from looking at the property that it had great potential. And even back in those days, we were talking about the potential for 2 million ounces. It was within the realm of reason. And I'm still of that opinion today. Now, going back to San Marcial, it had 2 operating mines back in the early 1900s. In fact, the Soledad mine was an underground mine that operated for years, and the other one was the San Marcial mine, and it was near surface, but it had operated for a few years as well. Now, that was when the price of gold, of course, was essentially just a few dollars. So, can you imagine how successful these mines would be today if they were operating at $3,300 gold? So we've done a very extensive mapping and sampling program, which shows the targets for us. And we've got a grand total of, I believe, is in the order of about 700 samples that have identified the areas where we want to drill. We believe it has similar potential to San Marcial. And now with Cerro Caliche being really starting to get underway, we will be able to devote some attention to San Marcial, and we're looking at innovative ways of financing the exploration program on there, and a drilling program of initially maybe 5,000 meters would give us a really good understanding of the potential and expand upon the potential for San Marcial. So that'll happen during the next 12 months or so.
Terrific. And, we have a really active, engaged audience here. And so I have another question, a couple of them coming in that I just like to get right to. So one person had asked, would you ever consider selling any of the properties? We're talking about Cerro Caliche and San Marcial, or is the plan to keep both no matter what?
The no matter what doesn't apply here. There's obviously a point in time where if somebody were to make an offer for the company or for the project, we would have to consider it because we're looking after the interests of the shareholders. We're not here simply to build a mine and live happily ever after. The goal here is to generate a real decent rate of return for our investors. By doing so, the best way for us, as we see right now, is to put Cerro Caliche into production. And Cerro Caliche, as you look at it today with approximately 440,000 ounces within the pit shells. It's only the beginning. It's incumbent upon us to do additional drilling and expose the complete value of the project. If it's 2 million ounces, let's work towards that, but achieve it with minimal dilution to the shareholders by using the cash flow from operations to generate the revenue for drilling. And so I believe that at some point, as in anywhere in the mining industry, you are subject to potential mergers and acquisitions. That in any kind of bull market, you will see a flurry of M&As occurring. We've seen some already happening in the junior space and in the intermediate mining sector as well. And that to me presages the start of a bull market in the gold sector, which has already occurred, and it's been happening maybe for the past 6 months or so. And it'll trickle down to the junior gold space as well, where we're situated. So we're not averse to having proposals come in the future for taking over the company or the project or selling the project. But it's too early right now. We know how to add value to the project with the drilling and expansion of the size of the project, and so there will come a point where we may say, okay, we've built up enough of a value now. If somebody wants to buy us, we'll accommodate. We'll take a look at it and assess it at that time, but not today.
Not today. Well, I have another question coming in regarding Cerro Caliche coming online, as you were just referencing. Another person is asking if you could answer what the expected free cash flow would be once it comes online.
I mentioned before that the free cash flow at $1,800 gold is in the order of about $10 million per annum. Now, when you extrapolate up to $3,300 gold, the numbers are astonishingly higher. So, unfortunately, since we haven't published a report at that price, I can't speculate at this point.
Certainly. And, I really appreciate the openness, the transparency here. Leadership is really, the team's track record is so important, I think, from the investor lens. They're often investing in people just as much as they are as the project. I'm sure you would agree. So maybe you could share more about your leadership team's background and prior successes in mining and capital markets.
So our team in Mexico is absolutely very strong. Starting off with Jorge Diaz, Vice Chairman, VP Operations. He's been involved in the design and construction of as many as 11 gold mines in Mexico over the years. And like I mentioned earlier, he's built his own open pit heap leach mine over the past 6 years as well, and is operating independently, and he owns 100% of it.
Okay.
Very solid engineer. He started off with Peñoles. He's worked for some of the development companies in Mexico. He was involved in the design and the construction of the Mulatos mine, La Colorada, and many other mines as well. Mel Herdrick, formerly head of exploration Mexico for Phelps Dodge, and he spent, I believe, 13 years with them. In 2004, he was one of the founders of a company called Pediment Gold, which, just like Cerro Caliche, acquired several projects and they drilled them, and they eventually turned into a very successful outcome because Pediment Gold developed a resource at La Colorada, which became an operating mine, and also on the Baja Peninsula or Baja California. Developed a 2 million ounce resource at San Antonio, which is very close to La Paz in there. And the company was taken over in 2011 by Argonaut Gold, which was trading at around $8 or $10 in that range. And so it was a very successful outcome for the shareholders of Pediment. And they along the same time that they were developing Pediment, between Jorge and Mel, they were putting together a project called Chipriona, which was located in the Mulatos mining district, very close to Agnico Eagle's La India open pit mine. And so that was the basis in which Sonora went public in 2011. Mm-hmm. And in 2016, we received an offer from Agnico Eagle to purchase Cipriano, and we sold it to them. So that gave us the money then to develop the initial exploration program at San Marcial, and it enabled us then to go ahead and purchase the Cerro Caliche project and made for the first payments for Cerro Caliche. So that was the history of these two gentlemen in Mexico. I'll have John talk about his own background. My background is I've been in the business for 40 years, over 40 years now, and I've been involved strictly in the mining and in the resource sector, not just in mining, but also in oil and gas and in geothermal energy. So I've had exposure in the Philippines and in Myanmar and Chile and most notably in the Democratic Republic of Congo. And then before coming back and developing projects in the United States and in Canada. So we are a very well-rounded team. John, as he'll talk about his own background just now. And John, you want to pipe up and talk about your background?
Yeah, I'm happy to give my background. My background's in finance, originally in the UK and then in Canada with commercial lending. And then I began a small group of public companies in the mid-'80s called the Crew Group. And only to touch on the most notable, one would be Asia Pacific Resources, where we established over 1 billion tons of very high-grade potash in Thailand. The shares rose to $11, and it was eventually taken up by an Italian company, and it's now moving to production. Another one would be Crew Development, where we started basically on the same principle as Sonora, which is to go to early cash flow. And we started that by acquiring a 51% interest in a South African company called Metarex. That gave us the cash flow. It gave us opportunities to develop other projects. Together with Metarex, we then privatized the Chibaluma copper mine in Zambia, which was quite an achievement. We then merged with Mindex in Norway, so we established a large Norwegian shareholder base, and we opened the first gold mine in Greenland. And if you look at that company, Crew, we had mining operations around the world, and it was very successful. And indeed, as time went by, Metarex was sold for about $1.3 billion. The other project worth mentioning, I think, is Western Geopower, which is a geothermal project that Ken and I started up in Canada here. Ken pursued that down through California, while I took a small sabbatical to look after a private venture, which was the Deutsche Coffee, which you know about, Ashleigh. It's a personal one. And then I came back into the mining business in 2019, when coincidentally I met Ken, who I'd known for 40 odd years, bumped into me. He said, "Well, John, I've got this small mining company. You're interested? Maybe to be a consultant." And I said, "Well, Ken, I don't become half pregnant. I'm either in or out." And so he said, "In that case, you can become the chairman." And I said, "Well, okay, I'd like to acquire some shares." He said, "Sure. In the market, we'll do financings," which I did ever since. So that's my background in financing. I'm not a geologist. I'm not an engineer, but I've always been involved in structure and projections. And where I think I can contribute to the company is the structure, the business plan, and seeing what it's going to be.
Very impressive backgrounds of both of you and your entire team. And yes, John, Deutsche Coffee, for those that have not tried it, not only is John committed to sort of the social responsibility, there's such an incredible story behind that. So if you have a chance, you should check it out. I'm going to open it back up for one final round of questions. Question did come in about what ways would there be available for the Cerro Caliche project for financing for the initial capex?
Forward selling the gold is one. And that is a relatively painless way of securing the capital. The other one, of course, is the traditional debt to equity, which back in the era of $1,800 gold, we'd be looking at probably in the order of 40% in equity and 60% debt. Now we're starting to see greater propensity to going, I wouldn't say up to 100% debt, but it's a possibility depending on the actual lender. But I think 80-20 debt to 20% equity is well within the reason at this point in time. But I think forward selling our gold is a very painless way of doing it as well, and that's going to be evident as we move towards as we secure the MIA approval, or the environmental impact statement approval, and but that's there are other means of funding it as well. There are royalty companies that we have spoken to. We're not keen on royalty because, unfortunately, royalty is forever. And we believe that because of such a low capital cost for the project, it will be a very, very quick turnaround for us to pay the capital costs, essentially within the first couple of years.
Terrific. And, moving back to sort of operations, Martin is asking if you can describe the drilling program. Is it ongoing? Kind of what stage are you at? You may have covered this earlier, but if you could just kind of recap that for Martin.
Yes. Okay. Well, it is a very topical question. Thank you for asking that one. The drilling program for the next phase has been designed for adding to the resource in the areas of the higher grade. And I look at it as a very low risk proposition. We know that the area is mineralized with lower grade material throughout, the average of 0.45 grams. And it's very, very productive. When you look at how the PEA was prepared, it had a cutoff grade of 0.2 grams. And that was strictly based upon the price of gold at the time, which was $1,800. Now, when you look at the price of gold at $3,200, $3,300, you're able to actually mine the lower grade material below 0.2 grams. And I can't tell you an exact figure today, but you should be able to unlock the potential for mining a significant amount of lower grade material. To give you an example, mine just about 100 kilometers to the northwest of us, the Araduta mine, has been operating for years with a cutoff grade of 0.1 gram. They're making money all the way down to 0.1 gram. So it's a matter of massive earth moving that's involved, and you're squeezing out through the leaching process. You're squeezing out the gold from the rock. So we are very confident that there will be the price of gold is enabling us to secure capital much more readily. B, continue with the drilling program, expand the resource. C, to be able to go in there and mine areas that were originally in our original PEA were uneconomic because of the price of gold, but are now economic. So I can only tell you about it. Each one of those will add to a superlative outcome for the production potential at Cerro Caliche. So we will capitalize on that. And our management team and technical team have the ability to take this forward to production ourselves and be able to benefit the shareholders collectively on that basis. And we're focused on that. This is the only project we're working on, and the only project we are going to be working on for the future until we make Cerro Caliche and Sonora successful.
Yes, well, this has certainly been a fantastic, transparent discussion. We only have about 5 minutes left. So I think to bring us all together, I'd like to close this out with a final question. And I would like to direct this one to you, John. What really excites you most right now about leading Sonoro Gold, and why do you believe now is the right time for investors to take a closer look at your company?
It's an excellent question, Ashleigh. There are four fundamental reasons as to why investors should consider Sonoro Gold. First, it's not a promotion. That's most important, but it's a well-structured, reasoned business plan, a legitimate venture, which is being developed by four proven business people, fully committed in terms of time and money. Second, but very important, there are no conflicts of interest. This is the only public vehicle venture that the insiders have. And thirdly, but equally important, Sonoro shares are very stable. They're very liquid. And the upward trend that we've seen in the last short while means that investors not only can buy in the shares through the marketplace, they're not locked in. They're at liberty to sell whenever they want to. So great liquidity is there. Last but not least, there are 4 or 5 essential components that Sonoro has, which basically makes it somewhat unique in the junior sector. And they are the team, which Ken has spoken about, a team with a proven track record, having developed projects individually and over the last 40, 50 years or so. Secondly, the development project, Cerro Caliche. But important to remember that this is just 30% of the known property. The other 70%, if it has at least the same resource as the 30%, then the numbers double, obviously. And it could also be the possibility of an underground operation as well. Of course, there is the San Marcial, which hasn't really featured into any valuations. But third is the share price. I think if you look at the share price graph, what that has shown over the last 12 months is great stability, moving up on fundamental news, not promotion. Fundamental meaning on the 1st of October when Sheinbaum came in, the share price doubled because it removed the fear of potential bans. And as it's moved ahead, what you're seeing is a greater interest in the company in terms of volume, in terms of share price. And this is because it's getting closer to the day when people recognize that the MIA will be granted. So we're at the moment, this is a long upward trend that we have going now. So the shareholder base is very important. We, as a shareholder base, we have 25% of the shares held by the insiders. And in addition to that, the insiders have given loans to the company of over $3 million, which have no conversion rights, unsecured. And that's a full demonstration of our commitment to the company. And to complement the insiders, 25%, we have a good shareholder base in Canada, USA, and particularly Germany and Sweden. In Germany, for instance, we believe we have probably about 40% of our shareholders, loyal shareholders who have been with us for a long, long time. So a good shareholder base we have there. The next, of course, is a realistic business plan. And it's important for people to understand that the business plan dictated that we stop drilling. And that's sometimes the hardest thing for people to understand in the junior sector is drill, drill, drill. But we, of course, we believe we have the capability of taking it forward. So why have unnecessary dilution to drill a resource that we're not going to use for decades? So the business plan from day one was to drill just sufficient to go to production. And also to avoid the trap of just going for high grade, which is basically playing roulette. We established now that this mine is going to be very profitable as an open pit operation. And if there's an underground possibility, then of course it becomes a much better position for the shareholders' point of view. So the strategic plan, the business plan, was very, very important. And the last one to make of important, essential, I would say, components of success for a company is financing. Now, we've raised over $24 million for this particular project so far. The amount of capital that's required is not significant. And if you look back to the histories of Ken and myself, we've raised over $300 to $400 million for various projects. So we think we offer the shareholders the 4 fundamental reasons as to why they should consider investing in Sonoro now.
Anything you'd like to add, Ken?
No, in closing right now, we've done everything that needs to be done to bring Cerro Caliche into production soon, very quickly. Like I said, within 13 months of getting the environmental approval or the MIA. And we're working closely with the federal government in Mexico to achieve that. And so we're no longer sitting there as an outcast, waiting for the next government to take over. We have a government that is pragmatic, that is supportive of the mining industry, and will find a way to make new projects successful as well. It's only a matter of time, and I congratulate President Sheinbaum in that regard. I believe that she is leading Mexico into a new golden age for mining.
Oh, that's a perfect way to end it. Ken, John, thank you so much, both of you, for your time, insights, clear explanations, and of course, transparency today, and for answering all of our audience questions. And to our audience, thank you for joining us. Thank you for engaging so much with us. If you'd like to learn more about Sonoro Gold Corp, visit sonorogold.com. You can look up the company under its trading symbols on the TSXV as SGO, the OTCQB in the US as SMOFF, and Frankfurt as 23SP. As I said, this session has been recorded. The replay link will be on Sonoro's website. And on behalf of this entire team, I'm Ashleigh Barry. Thank you again for joining us, and we look forward to seeing continued momentum and progress with Sonoro Gold. Have a great day.
Thank you, Ashleigh. And I really want to thank all the investors and listeners today for taking the time to listen to us. We are always open to your questions and communication with you. So please give us a call or send us an email or send us a WhatsApp, and we will answer you right away.